All right, so coming up today, we've got the dollar sort of consolidating at the highs. I've also got Aussie CPI. So, look, we'll start off with the dollar and that. Just sort of have a quick sort of look at how things are sort of playing out to sort of get the week off because, of course, we're getting these sort of like back and forth headlines in regards to the Middle East sort of situation. Where we at? It is 9 past 9 on Tuesday, 23rd of June in the morning now. And as I said, look, we'll start off with the dollar because, we did see the little gap up yesterday on the idea that, excuse me, that we would be sort of seeing maybe a bit more of a prolonged sort of shutdown of the Strait of Hormuz again. But of course, now with the beauty of hindsight, we've seen that really only lasted a minute. But the dollar, for the most part, kind of really just ignored that, to be honest, in that because yeah, we had a little bit of a gap up yesterday, as you can see. Came down and closed this gap pretty much to the cent. So like that's your gap right there. And as you can see, it wasted no time sort of coming down and closing it. And the reason that that's kind of important with the dollar is that because we see the dollar gap a lot of the time, and I always say with the dollar, it's either going to sort of close the gap straight away. In this case, this is on a 1 hour here. So what do? We closed it by 11 o'clock kind of thing. And of course, dollar opens a little bit earlier on the Mondays opposed to the rest of the week. Comes out a couple of hours early, but close that gap, closed off that sort of like reason for it to sort of come back down here. Now, if it doesn't close it straight away, if it just comes up and then breaks up higher, you can pretty much guarantee that through Europe, we're going to get a drive down to close it. And if you don't close it through Asia, so straight away, don't close it through Europe, then generally, yes, you've got the US session later on that night, but generally it's an indication that that gap may stay open for at least a week, possibly even up to 2 weeks or so. So by them sort of closing that gap straight away early, it kind of sort of eliminates the sort of the necessity as in a goal to sort of come back down here, close it, and then move on. And as you can see, the second it closed it, bang, it moved up. And I've covered this a couple of times with these are higher time frame sort of gaps, but look at the reaction you get when these things close the gaps. This is a good example of when it doesn't close it straight away. It takes a while to come back and close it. Didn't close this gap straight away. Takes a while to come back and close it. But when it does close it, you get that reaction. And just while we're on it here, you can see a big sort of gap up here. This was also on Monday morning, and then sort of closed it straight away. This one, it didn't actually sort of react and shoot back up of it all. This was a little bit different because, of course, we had that MOU. I think it was that the MOU being signed. There's so many things going back and forth. I wouldn't be surprised if it was one of these MOU things. Anyway, whatever. Let's get back to where we're at the moment. Because realistically, look, just to bring us up to speed in that, we've had the big sort of shoot up. And of course, everybody knows this from FOMC last week. The pullback there was very minimal. I've taken that fib off there, but the pullback there was about 38%, pushed up further. These are the things with the fib, you can still, so people will say, look, you got to take the fib from here to here, and of course, 100%. You can apply the fib in a bunch of different ways. Like, you can look at it, the strength of the overall move. But if you're sort of trading more intraday kind of sort of stuff, and you're not looking for necessarily the big home run moves, you can see how strong the actual move is coming at that point in time. For instance, right now, we could drag this even back down here now, grab the low, grab the high of this kind of move through here. You can see that at the moment, it's only getting to the 23%. So we know, even though this is kind of consolidating sideways here, there's still not much of a drive and an effort to sort of get this thing much lower. Let's get this out of here so we don't get confused on what we're trying to tackle. Bang. So let's fix this up as well. Let's put this down here because this is we can start to build this chart out a little bit, and we can sort of see where the buyers are, where the levels are potentially that, should these things break, we could expect a deeper sort of correction. But as it is at the moment, you can see the space is moving up, moving up, moving up. And this is what I said on the weekend video as well, that this is what the US dollar wrecking ball really is. It'll give these top signals where it looks like it's about to sort of roll over. It looks, nice big rejection here. It looks, and then it'll keep on charging through. This is why you don't want to stand in front of the dollar when it starts to break. And it's a significant point that it's breaking this 13-month high at the moment. We've got 1 week left of the quarter. Is it the quarter? Yeah, of the month of the quarter. So, you got the sort of end of quarter, end of month flows, and that sort of to sort of weigh into the sort of situation as well. But generally, those end of quarter, end of month flows, in my opinion, sort of come about the last 2-3 days or so. We're still at now a week out. So should it sort of close up around these areas over here, this is going to get a lot of attention across the markets as well. So for now, we can see a little bit of a sort of smaller kind of resistance coming in here. Actually, you know what? Let's just tap it up with this one over here as well. Because if we get a close above 100 and call it 101.10, a close up above here, that's pretty much done with this level, and we're going to see a continuation up to the top side here. But as you can see, even when they've tried to knock it back down, with whether it's sort of like, US markets opening, or headlines about the Strait opening more, all these kind of things, the dollar specifically is kind of sort of shaking these things off, and it's not really a factor so much for it as it had been previously. I mean, we saw these things, MOU, bang, got hammered down. Hey, we're signing it. That's fine. But what we're starting to see in this more recent period just here is that sort of the economic data is starting to outweigh what they're sort of saying with the let's pop this up over here. What is the economic data is starting to outweigh the on again, off again Middle East MOU war. And I think the risk with this is more that if we do get some sort of pushback with it, we know that the dollar sort of appreciates off any delays. We've seen overnight that, there was a resolution, or yesterday, resolution to a situation, and we didn't see a breakdown here. It actually, in fact, sort of moved up. So it's kind of ignoring it on one side, but I think it'll just add fuel to the fire should we sort of get any delays and add to the idea that we're going higher. I think what I'm getting at with this is I think the economic data is becoming, once again, the main sort of driver for the dollar. And I think that really does pose more of a risk to the break to the top side. We are seeing a little bit of a potential ascending triangle sort of coming up here. So what I'm sort of looking for here is typically if we do get a little bit of a sell down through here, watch for this. I'm going to put a little alert on this rising support here. If we do get a little bit of a bounce down here, typically if I was to say this was an ascending triangle, well, it looks like it could be, you probably want to fill out the thing. With these sort of areas, you kind of generally want to fill them out a little bit more. If he breaks up earlier, well, I think it's even more bullish, of course. But I think any sort of pullback here, I would expect to be bought up to then sort of attempt to sort of break out the high. I think the path of least resistance is still to the top side here. We do have a PCE later in the week, but I don't think we actually have much data coming out today, do we? No, nothing through Asia at all. And then just a bunch of PMIs and that sort of through the rest of the day. And that economic data out of the US is still looking quite strong. So just at least on that sort of actual sort of that part of that segment of the data, which PMIs is part of the puzzle to put in there. It's not the big boy sort of ones. It's not your CPIs, your NFPs, but it is something that you do plug in, and it could sort of see a little bit of a bit of positive movement on the dollar as well. So yeah, I think any sort of pushback, I'll be looking for a bounce off this rising support for a close above 101.10. All right, let's move on. We got gold. So gold, we saw that little bit of a rally up yesterday. So if we update this, let's clean this up a little bit. I actually put a chart up yesterday because there was a couple of interesting things happening yesterday. Obviously, we had that. Again, the big driver was the sort of MOU on again, off again, yada yada kind of sort of thing. When we saw it, they resolved it, bang, moved right back up. But again, you got to sort of take, okay, that's fine. We know that any sort of positive Middle East news is going to be positive for the dollar, positive for gold. We've seen this. We know how it's going to react, and it reacted exactly as it should. What we sort of want to unpack is, okay, well, what does that mean afterwards? So I put a chart up yesterday because look at this. This is a gap. This isn't a major part because this is more just interesting, actually, this part here, because this gap, as you can see, closed, bounced straight back up. But the point is that this level over here, for whatever reason, that at the moving up, they valued it there. This also happens to be where we bounced from after FOMC. And it's a 38% retracement of this big move down here. The first one, that's not as important. It's just kind of, yet another confluence kind of thing, because as you can see, there was a little bit of resistance over this area here prior to them coming into that weekend anyway. So for whatever way that they value things, that's where the market decided to hold it. That's where they decided to buy it. This is where they're deciding to sort of sell it and hold it underneath there as well. So this is going to be a crucial area for basically call it a swing point, because as you can see, above it, bang, tries to hold, above it, no, and below it, bang, reject down. And so I think this, if any move up here, needs to sort of really close above there to get higher. That's at 38%, because remember again, if we just look at this latter part of the move here, which is this breakdown, well, 38% is a strong continuation. So if they can't get it past the 38% with the bounce, it just shows that the demand isn't there strong enough to sort of push this thing up. Or even if they do have a little bit of demand, which obviously we saw off that headline, that the sellers are happy to just go jump on and just snap it on the head. So if we sort of drag this out, should this be a little bit of a bear flag, it still points quite considerably lower. So for me, I think sort of underneath 4160s, if we do get a sort of breakdown there, is going to open it up to sort of come down a little bit lower. We will obviously sort of find a little bit of support just in those previous lows down here at 4120s. But I think sort of realistically, as you can see, this is a little bit of an area that they've valued a couple of times as well. Put it actually just a little bit higher just to update that. But again, you look at these sort of things on the way up. Pinpoint this thing. Whoops. Yeah, should be right here. Pinpoint. Yeah, there we go, blue. They valued it. They valued it. Once it got underneath, the sellers are trying to hold it. Buyers are trying to hold it. Buyers are trying to hold it. So this is what we're trying to sort of work out. What levels of the market valued these things at what time? And this is your support and your resistance. And this is why, support and resistance can be the same thing. Well, kind of are the same thing, because everybody that's trying to hold it, they're trying to hold it above here. Everybody's trying to get below here. They're trying to hold it below here. And you can see the market sort of oscillating back and forth around here. So yes, down here, 4120 will probably get a bit of a significant move, because obviously, the major part of the bounce came off from this level. But to me, there's more interest in this level here at 4170s. Hence, I think if we break underneath there, I think that'll really open things up a little bit more. So, it's a little bit of a range here between 4170 and 4220. We are obviously hanging in the lower part of this at the moment, but should this thing roll over here, we're not saying much in the RSI at the moment, but should this thing roll over here, I think that really opens the door, and we could start to see another leg down, and at least minimum test these lows in the mid 4,000s. 4,040, 4,050 kind of thing. Technically measured move comes to around just above 4,000. So, we could get onto something here. And again, you look for these things happening, the cross chart confluence, and that'll all happen at the same time. If we see dollar break higher, I've said this 1,000 times, it's going to put pressure on metals. So if you see the dollar breaking higher and gold breaking higher as well, one of them's lying. And at the moment, we've got the dollar at a 13-month breakout. You could probably tip the favor in the idea that gold's probably lying on any sort of move up. And we've seen this last week, and things changed and it got absolutely hammered down. But about a $50 range for now. But I think that direction's going to come above 42.21 if we do get up there, or it's going to come underneath 41.65 should we get down underneath there. All right, tick along. We got silver, and Silver's respecting the charts pretty well here. Look, this is another back and forth level that we've seen. As you can see, buyers trying to hold it, coming back up, buyers trying to hold it, buyers trying to hold it, and it became a resistance, and they're selling it down here. So again, silver's a little bit more susceptible because it's really trading quite heavy in the grand scheme of things compared with gold. Like gold, as you saw, is quite a jump off. Let's go back to gold for 1 second. Gold is still a fair bit off, was it last week or 2 weeks ago, the most recent lows. Like there's a significant jump up there. Silver, on the other hand, is equivalent to have already coming down and testing these levels over here. So there's silver, this one here. As you can see, it's already really sort of come down and almost tested that sort of zone that we were looking at down the bottom over here. So let's get rid of some of these. Well, no, they were great trades, but sometimes it just muddies up everything when it's just so messy. Let's have a look at where it's bouncing to here. So we have seen a little bit more of a bounce over here, but again, the lows of the FOMC, the initial reaction before the second wave coming down, that's proving to be the resistance point there. So again, this is where the buyers need to get it above if they're going to see another squeeze. And if you're going to see a squeeze, it's going to come from, oops, let's make this direction. Yeah, put this down over here. Yeah, if we do get above here, then we are sort of going to see a squeeze potentially up to, say, around that sort of 69 level, 69.20s. However, that's not my base case at the moment. I think this thing overall just looks too heavy. You can see, as I've said a couple of times, really what we are doing, and this is what I said, if you go back to this level over here, I said there's potential that we sort of consolidate here. It's a fairly big sort of range, but do you see the similarities between this area here and this area here? Apart from the fact it's a lot bigger, they have the midway point. And this is what I talk about, sort of with ranges, when you're looking at these sort of consolidations like this, they don't just have support resistance, they'll generally have a swing point in the middle, which obviously I've highlighted endless times here, back and forth. And it's the same that we were looking at with gold a moment ago, with the dollar. This is technical analysis. Like, different assets will have their different little kinks and their different little sort of unique kind of bits of movement. This is why it's best to only really sort of trade a few things and not try and trade everything under the sun. But there are some kind of general rules that you will see that are applicable across the board. And particularly with these kind of sort of, correlated markets as well. But in this case, what we're looking at is obviously a bit of a consolidation range, quite a big range actually. We're talking 71, almost a $10 range. That's huge. But we are sort of seeing it sitting in this lower part here. That's why if we break above here, it's not like, hey, look, the whole game and bang, we're bouncing, we're going way back up. But it does mean that we potentially come back up into this top end of this range over here. We look at 69, we look at 70, but for the time being, all you could expect is a continuation of the range. But first things first, you got to get above 67.40. It's at 65 now. It's looking like it may want to sort of roll down and test these lows over here. Should you break the bottom down over here, this consolidated for quite a while. This is a reasonable length of time. It's just the swings have been more violent with it all. But again, if we look at the full sort of move with it all here, yeah, we had the measured move completed through that. But if we drag this to see where this whole move is, of the whole move, even this $10 swing couldn't get past the 38%. That's still showing that overall, obviously, the pressure is to the downside here. The bigger bounce through here is something that means that we could be sort of seeing a little bit of a sort of a little bit of stabilizing of the price, but it still means that these are your levels that you're looking for to get down here, and if you want to see a recovery, that's moving up over there. But that's not the base case. That's just, that's for the sake of saying, if the buyers were to really sort of get back in charge of this, where would it need to be, and what conditions would it need? It would need the dollar failing. That's something you need to look at. Also, the gold-silver ratio. That's coming up to potentially, like, we've got pretty much a breakout. Like, well, it's actually about to sort of confirm. I say about to because yet it hasn't quite confirmed. So anyway, just to finish off on silver, below 62.50, above 67.50. So $5 range there, and it's sitting just in the middle. And you can see even here, there's a little bit of a sort of back and forth with this little zone just through here as well. So you can build these things from a higher time frame, working down and down and down. But certainly, as it sort of is staying below, 65.50, it does look like it wants to sort of come back down towards these 63s at least. Just while I'm on metals, have a quick look at gold-silver ratio, because this is what I'm talking about with gold-silver. Let's put it on the 4 hour actually, at least. we're in a potential move to confirm a massive breakout, because this is also a 13-month falling resistance. We've also got a flag coming off the lows, which is broken. And this is the thing with these breakouts, remember, you've got the three parts. You've got the breakout, you've got the back test, you need the higher high. That's the third part that we're trying to drive towards at the moment to confirm this actual breakout. And if you do break through these levels here, you do have a little spikes of highs over here a little bit, but as you can see, this green level's a lot more significant to sort of play as a rejection than these little parts over here. You've got endless hits over here. Even this bounce sort of stopped at this green point here. So if we get above, 65, call it 66, that pretty much confirms. And realistically, there's a good chance that, back and forth along the way, we move back towards 80, because that is, and this is why that green level's a little bit more significant as well. You can see it was a base back in 21. That is the bottom side of this 14-year trend, which it broke and never back tested. So if we do get a move up over here, that's the target if we break through this zone here, which really kind of means downside for the metals, because this chart very, very much in that sort of is at a basic level, down, positive for metals, up, negative for metals. Look at this move all the way through 2025 when it tipped over 100. Got to 108 or something, I think. Yeah, 106. And then what happened with gold and silver? Wow, they went through the absolute roof, didn't they? And now we're starting to see them pull back a little bit as this chart moves up here. So this is definitely, if you're trading metals, you need to have this on your watch list. All right, finally move along. We've got Aussie. As I said, look, Aussie is slowly, like absolutely slowly dribbling down at the moment. It is in a short period, heavy but resilient. The dollar's breaking higher, and that's obviously across the board, and Aussie's not part of DXY, but Aussie is not sort of broken right down because we've still got a hawkish outlook. And as I said, sort of like, as despite them sort of saying that, hey, look, we're on hold, and most people are tipping the next moves maybe to be a, did they say the next one's to be a cut or something? I can't even remember now. Excuse me. The Bullock was, in my opinion, actually still quite hawkish, because, as I said, the takeaway line for me through that press conference was that inflation was here prior. We had an inflation problem prior to the war. So it's all very well that, hey, the war's over, petrol prices coming down, if that's the case. Oil's another topic completely. But if that is the case, on that, just those sort of like factors there saying, hey, look, the war's over, or at least coming to a resolution. Yep, oil's going to come down. We've seen oil come down. So that in turn should lower inflation, in theory. She sort of debunked that a little bit, or at least debunked it in their view, and that's what it's about. How's the RBA going to act? She explicitly said that we had an inflation problem prior. So it means you still need to tackle it. We're still at 4.2%. That's why today's CPI is going to be quite important, because we spiked up to, I think, 4.8 or something, 4.6, I can't remember. And then we came down to 4.2, equal to what they've got in the US. But the difference is that the US has gone from 3.8 to 4.2. So they're rising. We're actually coming down with the level that we're at in interest rates now. So basically saying that, in theory, if we get a low print today, it removes the need definitely to hike, because they're having the desired effect. The interest rates are restrictive enough at the current levels to see a progression in inflation coming down. And that is going to see the Aussie dollar sell down a bit more. Because the reason the Aussie's been so resilient is because it's been so defined, and it's sort of like, hey, you know what, they are hawkish, and they are going to do what needs to be done. And we had an inflation problem prior to the war. Well, that's fine, but if we see that inflation problem not be so much of an issue, then we need to start to go, well, hold on, wait, interest rates at the current level, they're fine, they're doing what they need to do. Let's have a look at the economic data. Let's have a look at the job numbers, because you don't want to keep it too high for too long and then sort of push a recession. That's the risk. And that's why they've got the sort of the two mandates they need to sort of juggle and move back and forth. So all that being said, lower print with the CPI today. Aussie's going to take a bit of a bath. Dollar breaks out higher. Aussie's going to take a bit of a bath. Dollar pulls back. Aussie's going to continue to consolidate this area. CPI comes in hot. Aussie's going to consolidate this area. They're the kind of calls that the way that I'm sort of looking at this situation at the moment. Look, downside to a certain degree, I feel could be somewhat limited, only just for the fact that we're coming into this rising support through here. But remember a couple of weeks ago, we had this negative divergence, and I said, look, negative divergence, they don't die in one day, in one move. And we've seen this thing continue to be heavy ever since it broke this wedge at the top over here. I did the video as we were coming into doing the negative divergence, and we break in the wedge here, and it is starting to push back down here. And just on one other thing with Aussie across the board, not just against the US dollar here, which one is it? This. If we jump on, and again, this is going higher time frame kind of stuff, Aussie has got a big negative divergence on the weekly against the US here. Negative divergence, which actually, so it kind of debunks my point a bit here, because the New Zealand dollar is also doing quite weak. It's coming back up. But again, look, we have a negative divergence. Okay, actually, now, to update this one, and this goes to show that I don't look at these charts prior to doing these analysis. This is actually sort of debunking this a little bit, because this is given a chance to come back and actually burn it off. So, okay, I don't trade the Aussie New Zealand, but that's moving over there. We've got the yen, negative divergence. And we got the pound, negative divergence. So across the board, it does look like Aussie's a little bit weak there, bar against New Zealand. But New Zealand's a little bit different, because they're very similar to us in a certain way. But that sort of being said, that it does on a larger picture look like we are still in for some weakness to come with the Aussie dollar. But really today, what's useful, what's applicable, is that CPI. And if we get a cool print, then I'm targeting down mid 69s, 69.30 to 69.40. These kind of areas down over here. If we get a hot print, then I think we push back up mid 70. All right, so that's pretty much it from me. Have a quick look. I think the data. All right, sorry. After all this touting, I've got the day. I've got the day wrong. CPI is not today. CPI is tomorrow. So we're watching the dollar today. Watching the dollar is what that's going to do. And we're going to sort of see if that's going to sort of drive things. And yes, okay. All that analysis was fine. I'll repeat it again tomorrow. All right. That's it from me.